Hi, my name is Nabila binti Hussein. I'm gonna talk about MFRS 8 operating segment. MFRS 8 help people evaluate the nature and the financial effects of the business and the economic environment where the company works. It makes the company show the business clearly. What is operating segment? Operating segment is a component of the entity that fit three simple roles. First, is engage the business activity that earn revenue or incur expenditure. Second, it's work operating regularly reviewed by CODM for two things, which is resource allocation and performance assessment. Third, discrete financial information for the company is available. We have separated the number for it. The next question is asking CODM. CODM is Chief Operating Decision Making. Identifies a function, not necessarily a specific person or job title. Its job is to allocate resources to and assess the performance of the operating segment. The function is often handled by one person, such as the Chief Executive Office, CEO, or Chief Operating Officer, COO. The CODM can be a person or a collective group, depend on how actual performance, the resources, and the assessment function. The CODM for Bonia Corporation Berhad is Chiang Sam, a founder and executive director. He oversees overall corporation strategy, plan, and long-term business development. Second, Datuk Sri Chiang Fong San. He is Executive Vice Chairman and Group CEO. He leads day-to-day management, brand direction, and implementation of growth strategy as a Group CEO. Since CODM deals with daily resources and assessment, the Group CEO's day-to-day management will best fit the function.
Next, types of segmental report. There are two types of segmental report. First, business segment. Business segment is based on nature of product and specific expertise, which require different business and marketing purpose. In Bonia Corporation, there are three types of business segment, which are retailing, manufacturing, and investment property development. These three are recognized as reportable segments. So, how we identify it is reportable segment or not? First, the significant three tests, which are revenue test, profit or loss test, and asset test. It must exceed 10% threshold either one. For revenue, we must take total revenue including inter-segment revenue. For example, we take manufacturing, 11,533 divided by 428,161, we got 27%. Same goes to other segment. Next, we must calculate 75% rules for revenue from external customers only. For example, we take manufacturing figure 3,000 ringgit divided by 377,329. We got 79%, which is exceed 75% rules. Second type of segmental report is geographical segment. It represents how entity manage the business in different locations from all foreign countries. It based on revenue and asset, which is non-current asset, not include deferred tax, financial instrument in each country of domicile and all foreign country. As we can see, no major customers represented because total revenue doesn't exceed 10%. Next, the benefits of making segmental report. First, improve transparency and performance evaluation. The company will get clear information to help the business growth and make most profit and revenue. Second, better resource allocation, which can make better decision making, which helps management allocate well and effectively.
Next, I will be talking about MFRS 134, which is interim reporting. What is interim financial reporting? Bursa Malaysia require that all entities with publicly traded debt or equity securities must issue interim financial report. These reports outline the minimum requirements for interim reporting, including necessary disclosure and the recognition and measurement of principles. The reports may be presented as full or condensed financial statement and can be prepared on semi-annual, which is twice a year, quarterly or monthly basis. The purpose of the interim report is to give investors and creditors access to a timely and dependable information, and to help users assess the entity's financial condition, performance and cash flow.
Next, for question 2, two significant events and transactions that affect an entity's financial condition and performance since the end of the last annual reporting period. The first significant event is Bonia's subscription of 30% equities in ITC Holdings Sdn Bhd. On 9 July 2024, the group invested RM7.5 million to acquire a 30% stake of 6.66 million shares involving a related party, Datuk Sri Chiang Fong Seng, which is the Executive Vice Chairman and Group CEO. This investment increased non-current asset under investment in associate and reduced cash by RM475 million as there is a cash outflow. It did not affect profit immediately, but it will generate returns through equities accounting in future. The transaction strengthens Bonia long-term investment portfolio. The second event is in 21st March 2025, Bonia Corporation Berhad acquired 3.75 million ordinary shares in Casa Bologna Sdn Bhd for RM5.66 million ringgit. By a signing agreement with actual horrific Sdn Bhd, it becomes 90% owned subsidiary. This acquisition resulted in increase in non-current asset as investment in subsidiaries and reduce in cash equivalent 5.66 million. Although there was no immediate impact on profit, the acquisition expand Bonia portfolio in property investment.
Next, by using interim report of Bonia, I will explain the interim reporting periods for both the current and comparative interim financial statement. First is statement of comprehensive income, statement of financial position, statement of changes in equity, and lastly, statement of cash flow. All the statement I have attached on below of the table for you to see. So for a statement of comprehensive income for individual quarter, the current period is from 1 April to 30 June 2025 and the comparative period is 1 April to 30 June 2024. And for cumulative quarter, the current period is 1 April to 30 June 2025 and the comparative period is 1 April to 30 June 2024. Next, for statement of financial position, the current period is from 1 April to 30 June 2025 and the comparative period is 1 April to 30 June 2024. And for statement of changes in equity, the current period is from 1 July 2024 until 30 June 2025 and the comparative period is 1 July 2023 to 30 June 2024. As you can see, the statement I have attached below for the current period of statement cash flow is 1 April to 30 June 2025 and the comparative period is 1 April until 30 June 2024. So that is all for our presentation. Thank you.